Time now for the markets, and Leighton, you say that there's talk of a good year ahead for the poultry industry.
That's right, Artis. One Wall Street firm is even saying the industry will definitely be profitable in 2014. We're also following these stories in the markets. The USDA lowers grain ending stocks. The cotton production forecast drops slightly as the feeder cattle market appears to have good demand. Tuesday brought the release of the last crop and supply-demand reports of this year. The USDA made the most changes to its supply-demand table for corn, but soybean stocks shrank as well. Extension Ag economist John Michael Riley explained the impact of the new numbers on the grain sector in this Wednesday interview. John Michael, what did Tuesday's report have to say about our corn situation?
Well, we did see a pickup in total corn use for the current marketing year, which with unchanged production, unchanged yield from last month, left us with a smaller carryover from this current marketing year to next, 1.792 billion bushels, excuse me, about 70 million less than expected, and about 100 million less than the previous month. So we really drew down that carryover a little bit, largely due to higher ethanol demand, higher exports, a number of different factors there.
And that figure was pretty much within the pre-report expectations, no real shock there at all.
Not a tremendous shock, it was lower, and so because it's lower, you would expect a market reaction to indicate that. We really didn't see that. Prices actually dropped, even though the carryover was smaller than expected. Prices were actually a little bit lower.
Mm-hmm. Now, a little bit unrelated, but the RFS discussion, renewable fuel standards, some uncertainty maybe for the future as far as corn and how that may all play out?
Definitely some uncertainty, largely due to the fact that we're just consuming less and less gasoline. That mandate is based on a percentage of inclusion, and if you start using less and you have a high mandate, then you're going to exceed that level that you're not supposed to, and therefore they've had to really take a hard look at that and potentially pulling that back.
All right, let's look at soybeans. What did the numbers tell us about the soybean market?
Less soybeans in carryover, 20 million less than last month, but right in line with expectations. Market reacted similar to corn, just kind of a ho-hum day in terms of compared to what you might expect. So yeah, less carryover for soybeans, again attributable to more demand.
So really neither bullish or bearish, just kind of like corn, just kind of a ho-hum.
That's right. Market just kind of didn't react very much.
All right. Now I understand there was some forecast as far as South America. Those numbers, is that going to be a major player as far as the bean market in the future?
That's really playing in lately. The expectation is they're having a good year. It looks like they're having a good year. We didn't really see that this month, but again, it's early in their growing season. I don't know the USDA is really ready to make a firm projection on South America just yet, but all indications are that they're having a really good year so far.
Now, as for cotton, Doan's termed Tuesday's report a neutral one. All cotton production is forecast now at 13.1 million bales, down slightly from last month, but down 25% from 2012. Yield is expected to average 806 pounds per acre, which is down 81 pounds from last year. The Doan's commentary said this latest report did no further damage to the cotton market. Our trivia quiz this week concerns peanuts, and here's your first look at it. What crop cannot be rotated on the same ground as peanuts? Is it cotton or corn or soybeans? I'll tell you at the end of the markets. The Wall Street firm Stephens Incorporated has released its outlook for the chicken business next year, and it sees profits ahead for this industry. Analysts attribute the positive picture to the fact that growth of poultry supplies will remain constrained through much of 2014. Further out, that economic picture for chicken is being described as murky, though. By 2015, chicken supplies are likely to increase, and traders believe that may weaken the profit picture. In fact, the website meetingplace.com reports some producers are signing multi-year contracts now in order to avoid having to negotiate next fall. Turning to beef in the markets, continued growth in the U.S. economy is seen as a must in order to really drive demand in fed cattle. Analyst John Roach describes the state of affairs this way.
The cattle market is just kind of struggling in here right now. The exports have been very good. We had, the last couple of months particularly, we had good export numbers, but we're just having a struggling kind of market. My hope is here that we're getting with positive economic news and employment news, and maybe we can crank a little demand back up. But struggling kind of a market, steady struggling.
Meanwhile, on the feeder cattle side, demand has been pretty good of late. However, analyst Sue Martin is concerned about what consumer attitudes may be as we get into 2014. She thinks the general higher cost of living may force some decisions that will be detrimental to the beef sector.
I think the feeder market has had some pretty good demand. We all know that. Feedlots wanted to buy as many cattle as they could get. You had moisture into the wheat pastures, so that was off to a good start, so they had a place to put them out on grass. I think that when I look at the cattle market, my concern is that once we roll the year over, how is the housewife going to keep paying for increased medical costs or insurance costs? Somewhere, everything's going up in costs. Somewhere, something's got to give. They're going to start cutting back on their grocery bill. Maybe it's smaller portions, however they want to do it. That is a concern. But in the long term, this winter is going to be a big bullish factor, I believe, for the cattle market.
Before our feature story, let's check the trivia answer for this week. And the correct choice is C. Peanuts and soybeans cannot be rotated on the same ground because they are subject to the same diseases.